Hi, we're going to take problem 6-35 in our book and go through that as one of the assigned homeworks for the week. After I have gone in and loaded all of the material into an Excel spreadsheet. I didn't post this because I think it's really important as you're continuing to practice in Excel that you really understand the value in thinking about how to set up your spreadsheet before you start the process. So there is a lot to be said for really thinking through how you set up your spreadsheet to make it the most efficient and able to work for you. So that's why I did not actually put this out there. All I did was load the problem information, and I'm going to keep that on one separate sheet. I'm going to go into the next sheet and I'm going to start the actual requirements. So requirement 1 asks us to prepare a revenue budget in dollars. So the thing that we really need to start with and understand is we're in the snowboard business, so we have snowboards. The expectation was laid out for us that it would also come from our sales department, and I'm going to go pick that up from the problem information. So it is 1,000 boards that we expect to sell. So this is the units. We also know that the selling price that we anticipate to sell in 2012, again, that's coming from my problem. So we know that we are going to sell each one of these boards for $450. So therefore, straightforward, our total revenue projection will be just straight math. 1,000 units times $450 a unit gives us $450,000. If it were only that easy, we could stop, right? But just to kind of reiterate, all budgets start with the sales expectation. So from here, we're asked to prepare a production budget in units. So from here, our starting point, again, our units are snowboards. That's what we do. I'm just going to set this up and then I'll go actually find out the information. So what we want to start with is our budgeted sales. And then this again is in units. We're going to add to that the target, finished good, ending, finished good inventory. That'll give us the total required. That's how much we actually have to produce. From there, we know we started with inventory already on hand, so I'm going to deduct our beginning finished good inventory, and that'll give me the units that need to actually be produced. So let's go get these things. So we start with the problem information told us again that we have 1,000 boards. In the information that we were given, which we would have gotten from our expectation on a manufacturing side, would tell us that we needed to have some ending inventory. And let's go see. We are told that should be 200 boards in stock by the time we are finished. Therefore, the requirement is adding the two of those together. From there, we know we had some sitting on the shelf, so we don't need to make those. We already have them. So we already had 100 boards sitting on our shelf. So therefore, the number that we need to produce in 2012 should be 1,100. So this is that step. So this will have part 2. Here's the part 1. And we'll move on to step 3. Again, this is following the logical flow. Each one of the areas that you're working in, obviously there's a sales department, there's a manufacturing department. So each of these are separate pieces, and our job in the accounting area is to know how the process should happen and how these pieces fit into the overall statements. So the next piece of this puzzle is the direct material usage and how much do we need to actually purchase. So direct material usage, I'm going to call that Schedule A. So I'm going to call this 3A, which is going to be direct material usage. And this is the budget for 12/31/12. Okay, so again, I'm going to set this up, and then I'll go fill in the blanks. So physical units budget. How many units are we talking about? So we have wood, we have fiberglass, and that is how much material will be used in production. So we make, I'm going to put this like this again. Wood, fiberglass, those are our materials, and a total. So in our case, we have, let's see, go back to our problem information. In the wood area, we need 5 board feet per snowboard. So we need to multiply that by the 1,100 that we calculated. So therefore, we would need 5,500 board feet of wood. For fiberglass, we actually need, let's go see how much we need to make one snowboard. We need 6 yards, and we calculated that we would need to produce, again, 1,100. So we need 6,600 yards of fiberglass. Just going to add these up. Now we need to figure out, with this piece, we're not done the schedule yet. We have some costs to take into consideration, so we need to do a cost budget for this. So we have available from beginning inventory. We have wood, fiberglass, so if we look at this, we have 2,000 board feet sitting in inventory, and each one of those has an associated $28 per board foot. So from a wood standpoint, that would be valued at $56,000. From a fiberglass standpoint, again going back to the problem, we have 1,000 yards times $4.80, and that'll cost that out for us. That's what we had in beginning inventory. So now we have to figure out what we value, the amount that we actually have to purchase this period. So again, we'll have wood and we'll have fiberglass. And in this side, we actually have 5,500 that we calculated, and we have so we're going to start with this 5,500, and then from there, let's see. We take away the 2,000, and then we're going to multiply that. Oh, let me start that over again here. So we're going to have a formula here that says take the physical unit budget, subtract from that our beginning inventory point, and whatever that difference is, let's multiply that by the $30 that we anticipate for 2012. Okay, so let's do that also for the fiberglass. So again, our starting point for this, let me make a formula here, our starting point for this is the 6,600 physical units that we need to be used in production. From here, we're going to subtract out our starting point, which would have been 1,000 yards. And then from there, we'll multiply this difference by the $5, which is the anticipated price structure for 2012. And that'll get us those costs. So the total cost of direct material to be used will be the combination, right? It'll be the 105. Actually, let me do it this way. So we'll take a sum of the 105 and the 56. That'll give us 161, and we'll total this across as well so we know how much this product is actually costing us. So the total cost of direct material to be used is going to be those numbers respectively for each of the different materials. So that takes care of schedule what I'm calling 3A, which is the direct material usage. Let's look at schedule 3B. So let's look at 3B, which I'm going to call the direct material purchases. Okay, so again, we're going to start with let's start with the physical units budget. We have this for wood, we have it for fiberglass, and then we'll have a total. So we're going to start with production usage that we calculated above. And we're going to pull up the 5,500. That's where we'll start. Then we're going to add the target ending inventory, which I think I have on this schedule above here. So our target ending inventory, I don't have it here, so I'm going to go over and get it from the problem. So our target ending inventory is 1,500, and that'll give us the total requirements. I'm just going to total these across before I forget here. So I'm going to take this and total it across, and take this and total it across, and then I'm going to go pick up what I need for the fiberglass. So again, I'm going to get that from the problem information. Fiberglass is 2,000, so that's where I will pick that up. And then from here, so those are the total requirements. We need to deduct what we have already in beginning inventory, and that'll tell me my purchases, how much I need to actually get. So in beginning inventory, I have $2,000 for wood, and for the fiberglass, the beginning inventory is 1,000 yards. So then I can say that I take the requirement, subtract out the beginning, and that'll get me to the point that I need. So let me just put some formatting in here so that we understand when we're subtotaling. So we subtotaled there, and then we are going to actually drag this over here, and then let's highlight this. Let's do it like this. We're not quite done yet. We still have another part to do, but this separates that out for us so that we know where we're at with that. So now we need to put some numbers to this. So again, we'll have some cost budget data here. The wood, and we have fiberglass, and this will give us our purchases. So the wood, we start with 5,000 units, and we're going to go multiply this by the unit price at the end of the year to come up with 150,000. We'll do the same thing for the fiberglass, so we have the 7,000 that we calculated, and we will multiply that by the ending level, which is $5 a yard, and that'll get us to the level of purchases. So that completes this task. We'll just finish this up. And again, I'm going to total this across since that's the total cost we're on the hook for a snowboard. So let's highlight this. This is indeed that requirement. And we can continue to move throughout the problem. So we've taken care of the first three things. Let's now again look and see what step number 4 is. Step number 4 asks us to prepare a direct manufacturing labor budget. So I am going to now take a look at that. So what we're going to start with here is, let's put down our cost driver. Let's come up with direct material labor hours per driver unit. Let's do our total hours, and let's take a wage per hour, and then we'll come up with a total. Alright, so let's call this the labor category. So this is manufacturing. So our cost driver in this case is, I think we have this on our schedule up here. We have 1,100 as the cost driver because that's the units. We know that those are at $5 per hour from the material. So we'll multiply this across to get a total hours that we need to spend. Then we know based on our budget assumptions that this was given to us at an hourly rate of $25 per hour. And when we multiply that, we get the direct budget for the labor. So that takes care of number 4. Moving right along, number 5 asks us to prepare a manufacturing overhead budget. So what we need to do with this is we're going to look at the level is actually going to be set at, let's see what we calculated. Our level of production for this area is this physical wood. Let's use the physical wood right here of the 5,500 units. So let's budget this level of 5,500 units. Let's take a look at it based on that. So I'm going to just make a note over here that this is at budgeted level of 5,500, and this is direct manufacturing labor hours. Okay, so we will have our variable manufacturing overhead cost. Okay, again, we're going to take this based on the direct material, and we'll multiply that by the $7 that we learned. Then we have some fixed manufacturing overhead, which we were given, so I'm just going to go pick that up. We were given that in the problem. Right here. And that'll come up with our total manufacturing overhead. And that takes care of the fifth piece. So from there, again following the process diagram that we saw in the book and we talked about in class, we go to the next piece of the puzzle, which is the budgeted manufacturing overhead rate. So with this, you probably remember that we're going to take our overhead and we'll divide it by our driver, which in this case is the labor hours. So in order for us to get this, we take our 104 and we divide that by our total hours of 5,500, and that'll give us $19 an hour. I should clarify a second here. So let me finish this, and then I want to just fix something that I just totally did wrong here. So when we go back up to this direct labor here, we're using this 55. Those are the drivers. That's the hours. Sorry about that. I picked up the wrong number. So 5,500, we're going to multiply that by the $7 an hour. So I apologize about that. So it says that direct labor hours are the driver. So again, we calculated the direct labor hours up here based on the 1,100 level. So in order for us to calculate the variable manufacturing overhead cost, which I'm sorry, I apologize, I went back up to step 5, you're going to take the total hours, which are our driver, and we'll multiply that by the $7 that we were given in the information for our budget assumptions. So I apologize, I picked up the right number, but it was not where really, it was coincident. It shouldn't have been where I told you the first time. So please disregard what I had explained the first time and pay attention to what we just talked about. So again, to recap, step 5, variable manufacturing overhead. Labor is the driver. We have 5,500 hours. We multiply it by the problem information, which was $7 per direct labor hour, and that's how we record that. So hopefully I have clarified my confusion here. So that takes care of clarified step 5 and takes care of step 6. So we'll move on to step 7. Which in our text it tells us to what is the budgeted manufacturing overhead cost per output. So I'm going to say this is the budgeted manufacturing overhead cost per output unit. And the way that we're going to go about getting that is that we're going to take the total overhead and we'll divide that by the actual number of units that we're going to sell. So the cost then per unit is $95. Again, all we did was take the cost that we calculated in step 5 and we divided that by the number of boards we're going to make. So that will be the answer for our budgeted overhead per unit. Move on to number 8. So many of these steps are fairly simplistic calculations. It's just the process that we need to get used to. So we're going to calculate the cost of a snowboard. I'm going to do this one in a two-step process here. So cost, in step 8, I'm going to put this into 2 pieces. So I'm going to say, let's do step A, 8A. Whoops, 8A. And let's make this the, let's compute the unit cost of manufacturing a finished good in 2012. So in order for us to get this, we're going to need to set this up. So we'll have direct materials. We know we have wood, we have fiberglass, and we have direct manufacturing labor. And that is what we have for total manufacturing overhead. So we have up here, we want to put our cost per unit. And these are our inputs. So let me back up for a second here and explain this a little bit more. So when I say the cost per unit of input, this column right here, I'm going to put the cost per unit of input. That's the cost per board foot or per yard or per hour. That's what I mean there. So let's go pick this up. So the cost per board foot, the cost per yard, the cost per hour. So that's what I mean by that column. Now our inputs, we should take a look at this. The input, I mean, is the amount of each input per board. So let's go get those. So this is the amount of each input per board. So if we go back up to the section of the text where it told us some of those things, it told us we need 5 board feet to make a board. It tells us that the amount of fiberglass we need to make a board is 6 yards. The direct material that we need. From a labor standpoint, it says we need 5 hours in order to make 1 board. So we're just going to multiply these across. And we'll start with that. So let's just take this and copy it right down. And then I'm just going to sum those up. So in order for us to have 1 board, here's the amount of manufacturing overhead that needs to be put onto each board we make. So with that, then now I can actually look at my my schedule that would actually go into step 9, which talks about an ending inventory for both direct materials and finished goods. So these 2 schedules are clearly related. We're going to say that this is actually the 9 here, which is ending inventory So the way we're going to set this one up is, again, we're going to have direct materials. We have wood, we have fiberglass. So that will give us one finished good, which is a snowboard. How many we're going to make, and that gives us the total. So on this, we're going to start with the units. We're going to do the cost per unit, and then we'll have a total column. So from wood standpoint, again, we're going to go and I think we calculated this up here. Our target is going to be, from an ending inventory standpoint, we're supposed to have 1,500 units. We could also have gotten this from the problem information, but I knew that we had used it already. We want to have 2,000 yards of fiberglass. So from a finished goods standpoint, we need to have, and I think we have this already up here as well. We can go back over to the other side if not here. No, it doesn't look like we've used this yet. So let's go figure out, we want to have ending inventory of 200 boards. So we're going to go with the cost per unit here is going to be, again, I'm looking at it from an ending inventory standpoint. So I'm going to pick up $30 a board foot. From a yard of fiberglass, that's going to be $5. And our snowboards, let's do the math across. You know what? We forgot to put something in here. So let me insert another line in here. I just noticed it's missing a piece. We need to make sure that we have our manufacturing overhead that we calculated up here didn't get in here, so we need to add that. This should actually, let's take this out for a second. Let's move this square down. And we never put this 95 in. Now let's sum those. And we're going to use that number to actually say our cost per unit, which we've calculated is 400. Then I can multiply this. And our ending, we're going to add these up, and that's what would sit on our balance sheet. Oh, that's what we're projecting sits on our balance sheet. So this should take care of the ending inventory dollars. We are getting there. So in the text, we know that the next thing it asks us to do is prepare a cost of goods sold. So again, I'm going to set this up. Beginning, finished goods. And that's given to us. So I'm going to make some notes here. This is given. We're going to go get this beginning finished goods. We've this many units, and they're multiplied by, and we should be told this price here. So in the book, it tells us that this is the beginning finished goods. Then we have direct materials used, which we've budgeted. So we're going to go take this. I'm going to separate this over to the side. And we've calculated this in one of our earlier schedules. So this, is the cost of those direct materials to be used. Then we'll add to that our direct manufacturing labor. And again, we calculated that as well. So let's go pick up that labor cost, which is right here. Then also we need to include our manufacturing overhead. Again, in order for us to successfully get all of these costs, we know that inventory is made up of different pieces. So we have our direct material plus our labor plus our overhead, and that would go into making one finished good. So this is our costs of goods manufactured. Again, this could be a review for you. If you remember back to your cost accounting class, you went over that. So again, a finished good has direct materials, direct labor. I'm just going to move this over, and also overhead, and that makes a finished good. I'm going to add a fact that I subtotaled there. So that is what our cost of good manufactured would be. We're going to add those to our beginning, and that'll give us our costs of goods available for sale. And we did go over this in class as well. It could be a review for some of you. Some of you probably haven't seen this in a very long time, which is why I assigned it so that you could get some practice with it. Sorry, here we have I added wrong here. Oh, I picked up the wrong number here. Excuse me for a second. So this right here, I picked up the wrong number, is, there we go. So that is our cost of goods available for sale here. Then from there, we want to deduct our ending finished goods inventory, and we calculated this as 80. So from there we have our cost of goods sold. We should have our cost of goods sold section. Now, after all of these processes have taken place, we're finally ready to go do an income statement, which again, each of these pieces is then compiled and really gets us to this end product, which is a budgeted, which is step number 11 in the problem, a budgeted income statement for 2012. So now we can start with our revenues. We're going to take out the cost of goods sold. That'll give us gross margin. From there we have operating costs. We know that those operating costs were variable marketing. We also had fixed that had nothing to do with manufacturing, so it's not part of our cost of goods sold. So this is non-manufacturing costs. And when we take those things out, we'll come down to operating income. So let's go pick up these different pieces. So again, our revenues, we calculated above. So we started with this sales forecast that got us to the revenue projection. We just calculated our cost of goods sold. We know the difference between those is gross margin. Our variable operating costs, we have that from the problem. So we're going to go get this from our problem information. And it said that our variable operating costs are 30 visits times $250 a visit. So we'll calculate those as 7,500, and we were also given an assumption of our fixed non-manufacturing is 30,000. So when we come up with this, we'll take our gross margin and subtract out those two operating costs, and we'll come up with an operating net income of 19,220. So there we finally have our projected income statement. Now I can't stress to you enough to build your Excel spreadsheet smart, because when people start doing some what-if modeling, you want to make sure that your spreadsheet can handle those changes, so that we have this built so that if somebody changes the sales projection, all of the numbers will change. So this has us doing a budgeted balance sheet. We are going to start, and we have cash, we'll have inventory, we'll have plant, property, and equipment, which we were given. That's all we'll have for assets. We'll have current liabilities, which were given. We'll have some long-term liabilities. Again, we're given that. And we'll have some stockholders' equity. So if we pick these up, we'll have cash. That comes from our problem. We would have to know these assumptions. Now there was an appendix that actually told you what that was, or how to project cash, but we didn't have enough information to do that. We have our ending inventory. We have our plant, property, and equipment that came from our assumptions. This will give us our total assets. Then we'll have the liability section. Again, I believe this was given to us in our problem. Our long-term liabilities are also given to us in the problem data. And our equity section was right below it, so I'm just going to copy that down. And if we get lucky, this will be in balance. No, it should balance. So this right here is going to be our total liabilities and equity. And we hope for a balance, and it does. It's always nice when that happens. So that is how we get through the budget process. Again, the budget process is done in different individual areas. Our job as accountants is to bring this together so that we can get to these statements. I think some of the key areas that you want to make sure you're paying attention to is if you refer back to our book, there's a lot of good exhibits in here that'll help drive you to success in this problem. If you have any questions or concerns, by all means, you're welcome to post something in the forum, and I'm happy to take a look at it. I will see you in our next face-to-face session.